Hey guys, welcome back to another video. So Jerome Powell is scheduled to speak at 2:30 and this is a highly anticipated event for all investors. The market is going to be widely watching this statement he makes post his two-day FOMC meeting. Now, we're going to get a set of things. But first, we're going to get a policy statement. Now, this is going to give us an idea of how Jerome Powell and the banking officials are positioning their message around taper. Now, we're widely expecting them to indicate that we're getting ready to taper the $120 billion of assets and treasuries that the government are buying every single month. Now, the expectation is such, a lot of people are saying that given the weak jobs figure and the inflection down of inflation, the Fed are going to be in less of a rush to start taper. So this has led a lot of people to believe that in this speech today from Jerome Powell, the Fed chairman, we're more likely to see that he says we were talking about taper. We spoke about taper, and he'll probably set the stage for a November/December start to taper. Okay, so a lot of people are ruling out the fact that a taper is going to start in September, even October, although we never know. And if it did, it'd probably spook the markets, as the markets are pretty much expecting a start in November, December. Now, obviously, given the uncertainty right now with the Evergrande crisis, the debt ceiling concerns, Jerome Powell will not want to worry investors, right? It's a turbulent time and Jerome Powell will need to sound reassuring, but at the same time, he needs to make it clear that we are going to be easing investors. He can't U-turn on that, because if he does, he's going to send mixed messages to the investor community, and that will cause extra problems for him and a potential taper tantrum. So he needs to stay steadfast like he's done so far and keep a one-line communication that tapering is coming and set some sort of a framework so people can expect when to expect it. Now, what does tapering look like? Well, what tapering looks like, and we've made videos on this before, is the government's currently purchasing 120 billion of assets, right? That includes treasuries and mortgage-backed securities. Now, some people are suggesting that a tapering could mean from, let's assume it starts in November. From November, they pull back about 10 billion of their treasuries and pull back 5 billion in mortgage-backed securities. So in essence, they're buying 15 billion less each month. Now, if you do the math on that, that means you'll be done in about 8 months. So a taper starting November, December time, you'll be looking to finish the full taper by June, July, right? So if we work to those timelines, we will be off government stimulus in terms of monetary policy by June, July, if that's the timeline that Fed Jerome Powell goes after. Now, the taper in itself is not really a market-moving event, right? So what will be more of a market-moving event are the things which will follow in the GDP forecast, right? So we're expecting a GDP forecast and we're expecting them to mark the growth down for the United States government. We've seen some weakening in the jobs figures. We've seen continued supply chain issues. We've seen weakness in the economy, and we expect that to be revised down by the Fed. The second thing we're going to see is the dot plot, and that's the key that everybody's going to be looking at. The dot plot gives you an indication of where the banking officials are forecasting interest rate hikes. And if we see more dots in 2022 and 2023, that could cause an issue for markets, because that would suggest that the inflation we're seeing is less transitory than we believe, according to those officials, right? Jerome Powell's always stood firm and said, inflation is transitory, but if we see more Fed officials leaning towards a 2022-2023 tax hike, that could cause some concerns in the market. And I think that's the cheeky bit that everybody's going to be looking at. They're going to flick across to the dot plot and focus on that more than the taper. So if we see an interesting difference in the dot plot where more Fed officials are being hawkish, i.e. expecting rates to move sooner, that could potentially move the market. Now, what else are we looking at? Well, apart from the dot plot, we're going to see some inflation forecasts, and we're expecting Fed Chairman Jerome Powell and the officials to mark inflation forecasts up. We've seen the supply chains continue to be exacerbated. Even though we saw an inflection in the last CPI reading, we get the next one on October the 13th. It'll be interesting to see where they put that reading to come in at, because a high reading there will obviously have concerns for the market around inflation. And if they're expecting inflation to be higher, then what are their plans to mitigate that in terms of a taper? So if they're seeing it higher in October, November, does that then justify them to start their tapering in November and December? Is that their plan right now? Because currently we've seen a weak jobs figure. We've seen an inflection down in the CPI. Are they going to project that to tick back up, maybe back at the highs of June? Or are they saying we're going to kind of still continue to slow down and decelerate the pace of inflation, which is still over 5%? Now, the interesting thing, the other interesting point to note is that Fed Chairman Jerome Powell has been very cognizant of the fact that he needs to decouple this idea of tapering with rate hikes. We know the market is far more sensitive to news of rate hikes and the Fed funds rate hike than they are for the taper at the moment, because Jerome Powell's done a good job of telegraphing the taper, so nobody can say they've not expected it. But with the rate hike, that could be a concern. So he's going to want to decouple it and remind us, well, if people believe him or not is different, but he wants to come across with the stance that tapering does not mean a simultaneous increase in rates. In other words, what he wants to say is, we're going to start our tapering process, we'll dwindle that to zero, let's say that's June, July, and then that could potentially open up the rates hike. Although a lot of people are expecting no rates hikes until 2022 and 2023. But if tapering really pushes through to June, July, there's no reason why in Q3 and particularly Q4 in 2021, we don't see rates increasing if the job still needs to be done, right? If it's not had the desired, if the tapering has not had the desired impact of cooling the economy. So where does that leave us? So we said that we expect a markup in GDP. We expect, a markdown in GDP. We expect inflation to be revised upwards in terms of a forecast. And then the other thing, which is quite critical, is we need to remember that the inflation we're seeing currently is a supply side issue. This is not a demand side issue. And this is what differentiates it from challenges we faced in previous generations. In previous generations, when you face this kind of a crisis in inflation, where inflation is rising rapidly, and you're trying to curb it, normally that is demand-led, and therefore tightening your policy can fix that issue. However, here, if they start loosening their policy, right, to try to fix the issues, that could then have the opposite impact, because this is supply-led, okay? So increasing demand is only going to exacerbate that issue. This needs to be solved from a supply side. So a lot of people saying, the monetary policy and easing of the monetary policy may not be super effective in this particular instance. So it'll be interesting to see, where does Jerome Powell come in on this? How will he act? My views are quite clear. I think he's going to say that he spoke about inflation with the officials. Because remember, if you go back a few meetings before, he would always say that I will let you know when we are talking about inflation, right? And then he let us know that they were talking about tapering. So I think now it's very clear that, he'll come out, he'll say it's definitely on the agenda. Everybody's talking about tapering. I don't think he's going to pull the trigger on a September or even October would surprise me in the markets, I think. And I think he'll probably set the stage for a November, December taper begin. And that means you'll be done by June or July. And I think we'll do a nice steady taper, right? Because that's the other thing. The market wants to know how aggressive is this taper going to be. People aren't talking about this aspect. A slow taper over 8 months, 9 months, 10 months is going to be reacted to far better than them cutting the taper in 25% chunks over the next 4 months. Right? That's going to have a big impact on the market. So we're going to see that. Then in the economic forecast, we expect GDP to be revised down. Again, if that's revised massively down, it could impact the market, but I don't think that's the market mover either. I think the market mover is going to be the next bit, which is the interest rate forecast and the dot plot for 2022, 2023. We'll also see a 2024 added forecast this month. So there'll be a column for 2024 where we'll see how people expect that. And again, I expect that interest rate to hike up a little bit more in 2024. But if we see more dots coming into 2022, which means Fed officials are expecting rates to go up in 2022, this could spook markets, because this could then be the indication that inflation is not transitory like we've been led to believe. And I think that's the important bit that we're looking out. Now, obviously, given all of this, it's really important that Jerome Powell reassures the market, right? We've made plenty of videos yesterday about the volatility of the market. We're green on the futures today at the time of posting this video, so hopefully we have a green day. Yesterday started off green, went red, went green. Monday was the worst day the S&P had since May, so it's a bad time for this meeting, but you can't plan these things, right? And it's not the first time Jerome Powell has had to calm the nerves of the market. He's quite capable of doing that, and he'll just need to be careful in his approach. But more importantly, it's going to be the interest rates. It's going to be the interest rates which the market looks to see when are these going to hike. Jerome Powell would do his best to decouple that message, to say, no, we're just talking about tapering right now. Interest rates is well down into the future. We're not even talking about that yet. But the dot plots show you where the banking officials are thinking, and it gives you a clue of their beliefs around inflation and how transitory this is. So there you have it, guys. That is what we're expecting from Fed Chairman Jerome Powell's media speech later on today. Hope you found this useful. If you like this type of video, please don't forget to hit the like button and subscribe, and I'll see you in the next one.